Good morning, students. So, welcome to my Vidya channel, and my name is Raman Kumar. I'm the faculty for Accounting and Taxation. And in this series of lecture, I'm going to take in classes for basics of an accounting. So, any person who wants to learn the accounting can follow this lecture because I will take the classes in simple English language. And before going to the accounting, and we have to learn one thing called as transaction and events, because accounting always starts with the identification of the transactions and events. So we have to know what is meant by transaction and what is meant by event. So generally, in case of a business or in case of any entity, there are number of activities are happened in day-to-day business operations, like purchase of the goods or sale of the goods or purchase of the asset or rent paid to the landlord or salary paid to the employees in that way. And among these all activities, how can we identify transactions and events? But to classify it, we have to know the definition. First of all, what is meant by transaction? So transaction is a nothing but the performance of a business activity. The performance of a business activity. Or it may be defined as any exchange made between business and the outsider. Any exchange made between business and the outsider is called as what? Transaction. And it means, for example, coming to the business, whatever the activity made in between business and outside. For example, business sell the goods. In return, he pay the cash. Here, exchange is made in terms of what? Goods and the cash. So, sale of good is said to be a transaction. For example, business purchase the goods. So, we purchase the goods from the another party supplier. Then we receive the goods. In return, we pay the cash. There also exchange is made in terms of goods and cash. That is a transaction. For example, rent paid to the landlord. There we receive the services from the landlord. In return, we are paying the rent. There exchange is made in terms of what? Service and cash. That is said to be a transaction. So any type of exchange made between business and the outsider is said to be a what? Transaction. And generally, these transactions are classified into the two types. One is the monetary transactions, and another one is non-monetary transactions. So, any exchange made between business and outsider is said to be a transaction, and the transactions are classified into two types. One is monetary, another one is non-monetary. So, monetary transaction nothing but the transactions which are measured in terms of money or money's worth. So those are transactions which are measured in terms of money or in terms of money's worth are said to be a what? Monetary transaction. Means the transaction should be measured into, for example, salary paid to the employee. So though there we can measure it in terms of money, how much amount we are going to pay. Or in case of purchase of the goods, we are paying something, some amount to the supplier. There, so we can measure the respected item in terms of money. So those transactions which are measured in terms of money or money's worth are said to be a monetary transactions, and the remaining means other than monetary transactions are nothing but non-monetary transaction. And then nothing but the transactions which are not measured in terms of money or money's worth are covered under non-monetary transaction. For example, quality of a product is not measured in terms of money. Quantity of the goods is not measured in terms of money. Pollution created by the entity is not measured in terms of money. And some items are there which are not measured in terms of money or money's worth are covered under non-monetary transactions, and these are not recorded in the books of accounts. Only monetary transactions are recorded in the books of accounts. Okay. So in short, transaction is nothing but any exchange made between business and the outsider. Transactions are classified into two types. One is monetary, another one is non-monetary. Monetary transactions are nothing but transactions which are measured in terms of money or money's worth, and those are only recorded in the books of account. Non-monetary transactions are nothing but those which are not measured in terms of money or money's worth, and those are not recorded in the books of account. This is meant by transaction. And second one is event. Event is defined as the consequences or the end results of the transactions. The consequences or the end results of a transactions are called as what? Event. And it means, for example, you purchase the goods, 1,000 units at the rate 10 rupee per unit. And out of that, we sold 800 units at the rate 25 rupee per unit. And there, the purchase of the good is said to be a transaction, and sale of the good is said to be a transaction because some exchange made in between business and outsider in terms of goods and cash. And because of the purchase and sale of the good, and out of the 1,000 goods we purchased, we sold only 800. Means the remaining 200 units are nothing but stock in hand at the end of the year. It is created because of the above two transactions. So it is called as what? Event. And another thing, we purchased the goods at 10 rupee per unit and we sold it for 25 rupee per unit. And that means here we get the 15 rupee per unit as a profit. And this is also the end result of the above two items. So it is called as what? Event. So event consisting of what? Closing stock. So profit or loss are covered under the definition of what? Event. Covered under definition of what? Event. And in short, whatever the items you mentioned in trading and profit and loss account are called as transactions, are covered under transactions, and those which are mentioned, which are covered in the balance sheet, are covered under event. Okay. So any exchange made between business and outsider is said to be a transaction, and consequences or end result of the transaction is said to be a what? Event. Okay. So thank you.